Alright, good evening ladies and gentlemen. Welcome back to Compound Interesting. This is Emil, and in today's video we're going to be talking about, well, Cathie Wood was in an interview recently and she gave her prediction for her next Tesla stock or her next big winner. So I'm going to run you through, I'm going to let the clip play now in a minute. I'm going to run you through my thoughts on these different stocks and my opinion on them and exactly what I'm doing in regards to those stocks. So before we get going, I just hugely appreciate if you could smash the thumbs up button. If you're not a subscriber already, I noticed 80% of my viewers aren't subscribed, so make sure you hit that big red juicy button right there and hit the notification bell, because I'm a small channel, it's much more likely that it won't get suggested to you. So make sure you hit the notification bell if you like my videos. Only do it if you like my videos, and then you'll actually be notified when I release a video. So the big reveal, let's see what Cathie Wood's big winner for the next 5 or so years is.
So we still think there's a lot of room or runway ahead, because what we think is not well understood is exponential growth. I think if we step back and look at Amazon in the early 2000s, I remember buying that stock, and many people derided that decision because the thought process back then is in the tech and telecom bust, which is, you know, the internet is a figment of Wall Street's imagination. What makes you think Amazon's ever going to make any money? And if you did at that time assume that Amazon's revenue growth would compound at a 20 to 30% rate for the next 20 years, you would have bought that stock all day long, even if you were using a dividend discount model, right? I feel like our portfolios are filled with Amazons because the seeds for what we are doing now, they were planted in the tech and telecom bubble, and they have been gestating all this time, and now they're breaking out to those growth trends, just like Amazon did.
So the portfolio may not be able to replicate the 500+% gain it's had in the past 5 years, but it should be, based on what you just told me, well over 100%. It should double plus in the next 5 years.
Yes, we expect more than a doubling in our portfolios over the next 5 years.
If I look backward, as you well know, Tesla accounts for almost a fifth of the return that you have generated in that 5-year time span. Which of your current holdings, Cathie, do you think will supply the biggest lift in the next 5 years?
Tesla's still in the running, but I would have to say the biggest upside surprises are going to come from the genomic space. And that's because the convergence of DNA sequencing, artificial intelligence, and gene therapies, importantly CRISPR gene editing, are going to cure disease. That convergence is going to cure disease. Now we have real science and technology surfacing the mutations in our genomic profile. And as they surface those mutations, what do we see? We see the earliest manifestations of disease. And now, with the combination of artificial intelligence and gene editing, we're able to both anticipate diseases and cure them potentially. Beta thalassemia, we're seeing it, sickle cell disease. We even think it will work in diabetes, which is where most, if you look at the largest category of spending year to year in healthcare, it's diabetes.
Cathie, another surprise for me in your portfolio attribution is that almost none of your performance, just 20 points out of 600 points, is from Apple, Microsoft, Amazon, and Facebook, the 4 biggest contributors to the S&P 500 over the same period. What about them doesn't make the grade for Cathie Wood and for Ark?
Well, we're not saying they'll be bad stocks at all. In fact, they've been very good stocks. And they were a part of our portfolios in the early days. But as they were scaling into the trillion-dollar category, we believed that our research would be focused better on the next set of fangs. And I don't mean fangs meaning in the internet age. We actually think the next fangs are in the genomic age. And if you'll notice our flagship portfolio, the largest exposure is healthcare for that.
So again, it's genomics that's cropping up here. Now I've released a couple of videos in the past, and some more recently about the genomics industry, particularly with Cas9, CRISPR Therapeutics, the company, and they've done really well and gotten good feedback. I think there's quite a demand for videos in this space, so I will be releasing more videos about this, and I actually want to interview someone who knows much more about genomics. So I'm going to be looking to find an expert in the genomics space and bring them onto this channel and have a conversation, ask a few questions to really dig deep and learn about this kind of complex industry. So if you're an expert in this industry, shoot me an email. I'll leave my email box in the description box, or if you know someone who might be interested in coming on and talking us through genomics, let me know. Okay, so I've talked about this before, and if you want to go really deep on how genomics and gene editing works, well, not particularly deep, but a little bit more deep than we're going to go in this video, I'll link a couple of videos up there. I found it really interesting that Cathie Wood believes that genomics, gene editing and gene sequencing can help actually cure diabetes, and that was in fact the biggest spender per as a disease in the United States. So that's a very interesting fact that I wasn't aware of whatsoever, that I'm aware of now thanks to Cathie Wood. Like, I definitely knew that gene editing and gene sequencing was going to help with genetic diseases, like obvious ones like beta thalassemia and sickle cell disease, where there's just problems with the shape of your blood, which causes you a lot of issues. But diabetes, the one that is spending the most money to get that cured, potentially curing that in the future, that's really good news, being a large CRISPR investor in Crispr Therapeutics and Arcgi. So yeah, maybe we should talk about Arcgi. So Arcgi is Ark Invest, so that's Cathie Wood's investment company. That's their genomics ETF. So let's bring that up for us now. So this is their top 10 holdings in their Arcgi fund. So yeah, they have lots more holdings, but let's just go through some of the main ones here. So all right, so we can see here Pacific Biosciences of California, or PacBio as it's commonly referred to, is in the number 1 position as of yesterday or today, since I just started this video, and that's just because they've gotten a recent bump up very recently. CRISPR was the biggest when I was preparing this video a couple of days ago. So CRISPR is my largest position in the genomic space, and my second largest position in the genomic space is Arcgi, so this fund. But yeah, let's quickly discuss the difference between CRISPR and Pacific Bio. So CRISPR Therapeutics, along with the likes of Beam and Intellia, they are gene editing companies. So they deal with actually physically cutting out your genes using the CRISPR-Cas9 technology. So that cuts out any faulty genes that you have, cuts it out and replaces it with the correct gene. So we're not going to get into much more depth on how exactly that works, but you can see how advantageous this will be in the future. So you can edit out disease genes, or genes that cause you to have disease, but also in the long tail you can see that we can actually edit out genes, or you can edit in genes that make your eyes blue, or to make you tall, or to make you smart, etc. So, or to make plants grow with more crops and make apple trees produce more apples, like some crazy things in the future for gene editing. So PacBio is different. So there's PacBio and Illumina, and they're in the gene sequencing space. So the difference between gene editing and gene sequencing is actually reading the genome, so reading your DNA and deciphering, okay, what's the issue with you, so they can give you a really quick diagnosis on all the problems that you might have with your genes. So they might be able to say, bam, you have beta thalassemia really fast. But on a more useful level in the long term, they can say, okay, we can read your gene, we've read your entire gene, and you're likely to be susceptible to this gene, or to this cancer, or to that. So you shouldn't eat this food, you should eat that food. So that's what gene sequencing is. It's basically reading your genes and coming up with information that would be useful to you from that. Whereas gene editing is actually going in, using the gene sequencing, using the data from the gene sequencing, and using that data, deciding what. So this is what Cathie was kind of saying in that video. So we have the gene sequencing from Illumina and PacBio. So now we have your entire gene sequenced. Then we're using an AI machine. So that's not going to be in Arcgi, but we're using AI to decipher, okay, what's the best thing we should do? to this genome, to this gene sequence? How should we edit it? And then once the AI decides, using vast amounts of data, decides, okay, what's the best approach, then the CRISPR team come in, CRISPR-Cas9 comes in, edits your gene, and then you're much, much healthier, your babies are healthier, and potentially you have a bigger... So CRISPR I've talked about before, so I'll link videos up there. PacBio is a competitor to Illumina. So I think you might have heard of Illumina. It's the largest company in this space. So it's a gene sequencing company, but they're actually making proper money, like they're making serious revenue. So they sell machines that sequence your gene really, really fast and for extraordinarily cheap prices. So, and the price has been coming down at crazy amounts over the last 10 years. It used to cost like $1 billion to sequence a genome, and now it costs a few $100s. So crazy drop in prices. However, the fact that they're already in the hundreds of billions in market cap might mean that there's not as much potential reward side to Illumina. And also PacBio is using a slightly different technology, and which will potentially be better in the future than Illumina's current technology. So PacBio are coming in with long read sequencing, and Illumina comes in using short read sequencing. So short read sequencing right now is cheaper and faster, whereas in the long term, many people believe that PacBio's long read sequencing for reading the genomes will be better than... It's already more accurate. It's just the problem is it's not as fast and not as cheap as Illumina's. However, they're the ones that still have a tiny market cap relative to Illumina, and they're the ones that will have the better technology in the long term. So that's why probably it's the biggest holding in Arcgi's fund, and why it's probably the more interesting investment in it than Illumina. I did a video on Illumina before actually, so I'll link that up there, but at that time I didn't invest in it, and again, it was because I'm not a super wizard in this area, so I'm trying my best to learn as much as possible. So PacBio and CRISPR are definitely the ones that I'd be interested in investing. Maybe also Teladoc. Teladoc's a very interesting business model. If you haven't heard of it, basically you go on your phone or you go on your laptop and you have a Skype call with a real doctor, a medically cleared actual doctor, and you can have a video chat with him instead of going in waiting in a waiting room. You can have a video chat with him, tell him your problem, you can show him your nipple, whatever is going on, and he'll diagnose you over the phone, give you your prescriptions. So yeah, that's the future of, well, it probably is the future of most doctor's appointments, because well, obviously sometimes you're going to need to actually physically be there so they can like touch your arm and see what's actually wrong. But for a little thing, or if you just want to get a checkup, you can probably just do it on Teladoc. So a great business model and something that I definitely want to look into. But as I was going to say, just so you're aware, that when Arcgi, so you can see these companies now, Pacific Bio is going up really fast, Crispr also going up really fast. But if one of these companies ever reaches 10%, Arcgi have to sell it. They can't let their stocks go above 10% of the fund. Any one stock can't be more than 10% of the fund, which is a bit of a shame, because that happened to them with Tesla in their main fund. Because Tesla's stock price went up so much so fast, they had to sell the whole way up, because it kept becoming... They already had quite a large position because it was their biggest conviction investment out of their entire fund anyway, so it's already a large position. So let's say it was 5%, and then it doubled, and then it doubled again, and then it doubled again. So they had to keep taking profits all the way up. So if they didn't have to do that, they would have much better returns now. But that's just their policy. The reason that that's their policy, that they can't have any one stock being more than 10%, is because no one wants to buy an ETF that has like a really large position. They're just going to go out and just buy the Tesla stock instead of investing into this fund that has a really large position in Tesla. So that's why. But for us investors, that's kind of a disadvantage, because we don't get the benefit of the enormous rise that could potentially happen from any of these companies. So that's just one thing to be aware of, that PacBio and CRISPR Therapeutics, if they double if they double over the next few days or in the next few months or years, those positions are going to get trimmed. So Ark Invest actually own 5% of CRISPR Therapeutics. They own 5% of it. So you can see they have $500 million stake, and CRISPR Therapeutics is a $10 billion company. So I'm a big fan of Arcgi. I have some shares in Arcgi, and I also have some a bigger position in Crispr, but I definitely want to start looking into PacBio, and maybe I'll release a more in-depth video on PacBio soon. But if I don't get time to study these two companies more in depth over the next coming while, I'll probably be adding to my Arcgi position. Obviously that's not financial advice, that's just what I'm planning on doing. But if you're really well versed and knowledgeable in this industry, there's not really much point in you paying that 0.75 fee every year to Ark for managing your funds in the Ark ETF. So you can just go out and buy a couple of these stocks like PacBio and Crispr, or whichever ones you think are going to do the best. Also, the fun doesn't stop there. There's another stock that Cathie Wood thinks is going to be the next Tesla or the next big payout, and that is Bitcoin. So Bitcoin, I'll let her talk to you in this clip again. So this is from the same interview.
Bitcoin historically was a huge contributor to your returns, and I know you're still bullish on it because Ark recently published 2 very favorable white papers on Bitcoin. But so far as I can tell, there has been no Bitcoin in the Ark Innovation ETF for more than a year and a half. How come?
Yes, well, we put it in at a 1% position in 2015 when Bitcoin was $250. And we scaled with it. We didn't sell it at all. So it hit 10% of the portfolio, at which point we were forced to sell. And at the same time, there was some forking taking place. So we were getting distributions. And what we learned is that Bitcoin threw off what's called unqualified income, which is not illegal, but from an IRS point of view, if our portfolios generate more than 10% of gross profits in unqualified income, which is usually commodity-like income, the IRS allows that 10% and then will confiscate the rest of it. So if we moved into a black swan event where the equity markets imploded and Bitcoin took off, our clients would be able to keep only 10% of that gain. And we just thought this was too much of a risk from a fiduciary point of view to subject our investors to. So what we did is we moved out of it in early 18, better lucky than smart, because of course we went from $20,000 down to, at the end of 17, down to below 4,000 earlier this year. In our fully discretionary portfolios, where we are not subjected to the 40 Act rules of the SEC, our Bitcoin position is about 7% right now. So that is how optimistic we are on it.
And it's once again flirting with $20,000. Can you put a price on your level of bullishness?
We are extremely bullish. Our confidence in it has gone up since 2017, because what we saw as it dropped from 20,000 to below 4,000, it actually got well into the threes, I think in 2019, was that Bitcoin's share of the crypto asset ecosystem moved from the low 30% range in terms of value, network values, into the low 70% range. And what did that tell us? That confirmed in our mind that Bitcoin is the reserve currency of the crypto asset ecosystem. So it is the reserve cryptocurrency, which is a very important role. It's the flight to safety currency. It is Bitcoin's technology, or Bitcoin's blockchain, is the most secure of any other blockchain. And so it makes sense that Bitcoin would be the reserve currency of the crypto asset ecosystem.
Cathie, in August of...
But yeah, unfortunately, Cathie Wood had to trim her position in Bitcoin, so they didn't get the full effects of the latest run-up from Bitcoin, but they're still enormously bullish on Bitcoin over the next year, or not, probably over the next decade, and it's my largest position. So if you're interested in learning a bit about Bitcoin, I'll link up some videos up there for you now. So that's all I wanted to say for this video. I really hope you learned something. I hope you enjoyed it, and I can't wait to see you in the next one. Thank you so much for watching. I really appreciate it, and see ya.